There you go. That's a good way to see it. So, yeah, I don't know where to begin this one. Yeah, yeah. Looks like Alex will focus his time on another write up. By the way, I I sent another one this morning about robotics. So if you want to learn more about robotics, then I'm sure there's a few things that you can learn and that will keep you out of the market, which is what we want. Um, all right, so let's get started. Really a tale of two markets again. Very frustrating market. I'm the first. So if you are, you're not alone. That's for sure. Nothing works in the last few weeks and months, and when it starts to look good, then they slam it down again. So that's the market we're in, unfortunately. And yeah, if we cannot firm up today, if we cannot find support, then I will reduce exposure by a lot, if not going all cash. That's the part of being uh, in a drawdown, is I don't want to kind of see all my stop loss taking me out. I prefer to manage risk and wait for the market to offer more clarity. So yesterday was looking good. We had that daily structure reclaim and back test on QQQE. On the weekly, we had that weekly reversal pivot reclaim. We closed right above the 10-week moving average as well. Oh, thank you. Thank God you're there. Thank you, Jennifer. So, um, yeah, close above the rising 10-week moving average. Um, but again, the tail of two market. You look at QQQE, which is outside of tech, but you look at tech and we're below a declining weekly structure, and we look at the Qs and Nasdaq futures, and we have that declining 10-week moving average rejection, and now with that tonight, not tonight, but this morning gap down, it looks like we might break down from that kind of flag. Listen, we'll see what happens. We're still holding yesterday's low. We're still holding that top trend line. We're still holding in the larger scheme that range. But that's not easy, right? That market is giving hopes and slamming down the next day. So that's the market we're in. We have VIX now back above 20. And again, it's been 31 day above daily structure. And I went back in history and recent history. We had a similar action back in 2022 at the end of the bear market, but VIX was quite elevated already. We had kind of the same thing in 2020, but it was flat, not really rising. 2020, so COVID crash, obviously that's not the same thing. We were hitting almost 100. The one that I found was back in, that was with spikes. that was with spike. The one that I found was actually in 2026, 2027. So that was spiking. But if we look at the same length as we had kind of the same rising pattern for a long time above the daily structure back in 2007. We had kind of the same thing as well right here. And then obviously was kind of the financial crash. But maybe something like this, not a big spike, barely above 20, and then it spiked to 30, 40-ish. And stayed elevated for that downtrend that started. So there might be other occurrence, but that's in kind of the last 20 years. That's what I saw that maybe was most similar to what we have right now. All right, so obviously if the market finds support here, we want to see the VIX come back down, eventually break down that structure. That's what we want to see as confirmation. Credit spreads, new high. And if we close the week here, then we'll have a close above the weekly structure. And yeah, so portfolio, not great action. So Meta still in weekly structure. It's all good so far. Uranium, new trade from yesterday, still holding the weekly structure. ENTC still in the weekly structure. VST still in the weekly structure. Interactive Broker still in the weekly structure, right at the 10-week moving average. So that would likely be the name that I keep. And then my not so hot, more speculative plays, Cypher and Nebius, that is impacted by CoreWeave earnings, is down 5% this morning. So I want to see how that open is handled, but that might be the two names that get off the portfolio pretty quickly if we don't find buyers at the open. Just to manage risk, not wanting to hold to names that have 7 to 10% ATR. And obviously, that's the reason why you have to be careful building a portfolio, looking at the concentration of speculative names. If you have all 10% ATR names, then your portfolio is basically very volatile, and every kind of shakeout, weak open is giving you those wild moves. So always trying to balance and keep a small numbers of those high flyers and be more in the 2.5 to 5% ATR is kind of my sweet spot range. All right, and in focus, I don't have much. I found a nice name in the lighter group, but somebody just reminded me that it was a China name. So yeah, that won't be a focus for me. But if you don't mind trading China names, then HSI is leading name in the LiDAR space. They're doing low cost LiDAR sensors for industrial robotics, automation, and all that. So that was a very good find, but unfortunately, because it's Chinese, I don't want to trade it. Otherwise, I had ETN and yeah, RCL is gone as well. So I had ETN in focus, but the closer we get to the weekly structure, the better. So it might be for next week. Now we're gapping down a bit of expectation breaker from yesterday's, but the day's not done. But yeah, I like that kind of bigger base, failed breakout, reset of the weekly structure, creating that cup and handle of the right side. So ATN is a name that I shared in the AI write up as well from yesterday morning. So a good name to watch, good team, and RCL. I liked how that's basically the same kind of chart, right? Fail breakout, reset, higher low in the rising weekly structure. But yeah, CCL seems to gap down as well. So yeah, kind of expectation breaker in that group as well. So I will keep it in focus. But anyway, if the market is not strong today, and we cannot kind of remove that expectation breaker to the downside and close super strong, then obviously it will be about reducing exposure and not increasing exposure. So unless there's a big bread trust and buyers coming hard, uh, there's no way I'm adding exposure today. So I'm keeping those in that focus, but not actively ready to engage. Yeah, SNDK. I don't know. I'm trying to target less extended names. And if you look at SNDK, which is flagging above the weekly structure, but 3 times ATR from it, then my problems become the extension in the other names of the group and the potential breakdown that we see in those lagger name in the group. So we had that wedge breakdown, retest, whoa, lower high, and then if we cannot hold that bounce attempt yesterday and we really break down, and we see the same thing in STX, by the way, uh, it means that probably that the group needs more time. So if your leader is trying to hang out, is extended, and you start to see the rest of the group breaking down, then probably that even the leader will have a hard time to gain traction. Um, and if the market breaks down and the memory names and the optical names are basically the last one standing and start to break down as well, then there's not much leadership left. And that's why I'm always market first. And that's why it's been super hard lately because uh, QQQ never gave up that weekly structure, even the daily structure only recently, but since November of last year. So that's why I'm personally having a hard time. I'm following my basket of stocks, price action, but there's just no follow through, and mega caps are taking a beating. Uh, Leadership is pretty narrow, and if that leadership is starting to break down, then whoops, we have a problem. All right, so I hate being negative, and I don't want to be negative, but I think that there was some interesting constructive action in the last few days. Um, Yesterday was even more bifurcated with bad action in mega caps, okay action in the broader Nasdaq. But if we negate that okay action with an expectation breaker to the downside today. VIX spike, credit spread spikes. Bread is bad, and the mega caps are kind of bringing the rest down. And we see leadership in memory stocks and in optical breakdown as well. Then I think that we have to respect that risk, and that will mean to reduce exposure. All right. Um, I'm not here to call anything. Again, I'm just following price action, and sometimes it looks good uh, on a day, and it looks bad the other day, and that's the game where we are at key pivotal point where we can either flip up or down. Listen, it's easy when we are 28 weeks above the 10-week moving average. Those morning calls were all about finding opportunities, playing the pullback into rising structure. Uh, the game is the game is easy when we are in that situation. The game is easy when we are in clear downtrend below weekly and daily structure. All right, so but now that we're just not getting traction and still in structure, the game is a bit different. All right, that picture can change super quickly. That picture can change on a daily basis, and that's what I'm trying to follow. Yeah, exactly. We're in chop. That's very true. And that chop started basically end of October. So since November, that's the chop we're in. Yeah, exactly. There's play outside, but uh, for how long? All right, that's the big questions. Uh, if you start to see the Russell, NYSE putting those kind of negative expectation breaker while we are already 63 days above the daily structure, that will be a problem. Same thing for RSP as well, by the way. Uh, Yesterday was looking very good for a potential breakout. Today we're still above rising structure, but that's still an expectation breaker. So do we have the same action as early February, where we have that breakout attempt, shakeout, and then the following day bread cross? That would be uh, diabolical and probably frustrate the most. Yeah, Rhenium is gapping down, but not that much. We'll have to see. We're still in daily structure. If you're zooming out, we're still having that cop and indole. Uh, it's not too bad in uranium, to be honest. Yeah, and GDX, that thing is crazy. That's the longest stretch, and by far, since the ETF exists. It's been 58 weeks above the weekly structure. 7.66 standard deviation above the 10-year average. Talk about extension. All right, guys, so I won't put you to sleep anymore longer. I'm a bit perplexed with that action, to be honest. It's a bit frustrating for me as well. So the thing that I can do today is if it doesn't work, I will start to peel off exposure, manage my risk, and wait for that market to decide again. And then we'll be back at it again. But guys, this is a frustrating market, but there's always period like this. Trading is all about that chop those downtrend. If you think that trading is all about green months every month, you have to rethink your expectation of trading. Uh, look at, I don't know, what's his name? I don't remember. I will share that. A known trader shared his whole equity curve of like the last 20 years, and you can look at mine as well. I shared that since 2020. Uh, it's not the first period of a drawdown. Yes, this one is frustrating because it's chop, it's not downtrend, but you will always have those drawdown. You will always have those months where nothing works. Um, and yeah, we had basically super strong years in 2023, 2024, 2025, three big back-to-back years. Uh, so maybe we have a shitty year, but again, we're not even 2 months in this year, so who knows what could happen. So let's be patient, let's be positive, optimistic. Uh, we manage risk as always. We'll wait for our pitch, but the market will come back, guys. There, it always does. So don't get too negative. All right, guys. So have a good one. And again, I will be in the trading pit or in the Q&A channel if you have any questions. All right. So have a good one. Cheers. Bye bye.